This is Jay Martin.
Quick question for the audience. How many of you currently own uranium stocks? Raise your hand. Keep your hand up if you feel like you really understand uranium supply and demand fundamentals. It's about 5%. I'm with you, all right? I'm with you. So here's where we're going to start then, because I find this sector to be more complex than gold, silver, supply and demand economics. Rick, I want to start with you, and keep in mind, actually, I'm getting ahead of myself. I want to do some introductions before we jump in. 30 seconds or less. We'll just go around the horn. Please introduce yourself to the room. Who are you, and how do you spend your time?
Rick Rule, retired investor and speculator. Spend my time not being retired.
Daniel Major, GoviEx Uranium, developing projects in Africa.
Thank you, Daniel.
Nick Hodge, co-founder of Digest Publishing, financial newsletters published for the retail audience that cover the whole gamut of the market.
Thank you, Nick.
I'm Fabi Lara, and I'm just a private investor just like you guys, and I spend my time losing money and sometimes making some.
All right. Awesome. So, Rick, I'd like to start with you because you recently hosted the Uranium Bootcamp, which I believe was to educate retail uranium investors, right?
Correct?
Correct. Okay, so can you simplify? I mean, we tend to get too wrapped up in technicalities that don't really serve us. Can you just give us the haymakers, uranium fundamentals? What should retail investors worry about knowing?
I guess 3 haymakers. The International Energy Agency says that the total all-in costs, including cost of capital, for uranium production worldwide is about $60 a pound. So the industry makes it for 60, and they sell it for 50. They lose $10 a pound, 120 million times a year. And of course, being miners, they try and make it up on volume. The incentive price is more like $70 to $75 a pound. So the easiest haymaker is this. Either the price goes up so that the industry earns its cost of capital, or the lights go out because there's no uranium. That's the first thing you have to understand. The second thing you have to understand is that as a consequence of the first thing, we're using more of it than we produce. We're taking it up out of inventory. And the inventories shrank as a consequence of my former firm, Sprott, buying 55 million pounds and taking it out of the open market. The most important haymaker that I can think of that's really new is that for the first time in my life, I've been involved in a politically correct fuel. It would seem that uranium, because it doesn't generate carbon, is now, it's sort of, as opposed to Chernobyl and Hiroshima and stuff like that, it's a politically correct fuel. And while it sort of bothers me to be on the politically correct side, I like the fact that we actually will be able to permit new mines and stuff like that. So I would say that those are the three important factors.
All right, I appreciate that, and thank you. Daniel, I want to pass it to you next as the uranium entrepreneur on the panel. From my perspective, the biggest barrier, and this is just from my perspective, to nuclear adoption hasn't been the economics, it hasn't been the efficiency, it's been public sentiment, right? So Rick kind of touched on this now that that's shifting. Are you seeing that to be the case? Are people less scared of nuclear than they used to be? Are they more open to considering nuclear than they used to be?
Yeah, I think that goes 2 areas. One, you saw the shift last year at COP26. Governments all focusing on being clean energy by 2050, having targets set out there. And then a realization that the only way you could actually do that was to do it with nuclear. The recent actions, particularly in Ukraine, sanctioning on the Russians, radically changed and accelerated that even further. We'd seen it coming through as well as last year as energy prices suddenly shot up, and then people realized that the base energies that they thought were always going to be cheap were no longer cheap anymore, and you had to find another source. And then if you look at the consumers, one, he's hurting in his pocket, he wants cheaper power. But if you look at all of the surveys that have been going through around the world, increasingly we are seeing a shift to sentiment from the consumer realizing he wants to have nuclear. And that's across the world, even in Germany.
Even in Germany, all right.
Even in Germany.
We're going to follow up on that Russia thread in a bit. Nick, you've covered uranium on our stage since I met you. Are we in a uranium bull market right now?
Oh yeah, you're in a uranium. You're in the
What
pullback.
inning are we in?
Oh, you're in. It's tough to say. Like the third inning, I would say. If you look at a chart of uranium stocks in 2007 and the run up, and then they sort of pulled back a little bit. I think you're in that first sort of pullback. You had the spot price of uranium run up to over 60 pounds, quite fast, almost too fast, I would say. And then you've had this sort of global sell-off over the past couple of weeks that has taken all industries with it, and commodity prices come down as well. So you see. Just in the past week, the spot prices have ticked back down below $50 a pound. And I view that as a very healthy consolidation. I think, in fact, some of the related equities were oversold below the levels where I would have been comfortable buying them on a pullback. So third inning, amid a pullback, I would say definitely in a uranium bull market.
And Fabi, how are you recommending or how are you talking about in front of your audience, right, to enter this space right now and allocate cash? And are you allocating cash right now in the uranium sector?
So I've been almost fully invested in uranium for a very long time, and I've sat on mostly developers. And the way that I like to think about it is if you're investing in something that you really believe in for the long term, there's an amount of certainty that's linked to that investment thesis, and that's the truth with uranium. That's part of the thesis. There's certainty that we're going to continue to need energy, more energy than we can produce today for my generation, for the generation that's coming as well. We're not going to all of a sudden lower our standard of living when it comes to energy needs. And so because we need the whole gamut of nuclear, which is clean energy, we need solar panels, we need absolutely more of everything, you have to try to not dilute that certainty by only going for the gambling shots, right? So you don't just want to have the maybes, the crazy explorers, which is great to have as a certain part of your portfolio. But also, look at the producers, look at the developers, right? Because they have pounds in the ground, and you don't want to dilute your certainty by just going out, taking a certain thesis, but going for things that are too risky, because then you're losing the game.
Okay, I'm with you now. We just heard 4 fairly bullish statements, so can we try to cover the other side of the coin? What could prove our bullish sentiment wrong? What could shift or change that would make us change our narrative? Does anything come to mind?
Again, 3 things. A couple times in this bull market move, the juniors have become too expensive, which is to say the narrative got ahead of the reality. People, when they look at the juniors, they point back to 1998, 1999, and the quantum moves those companies have. Remember that Paladin, as an example, started off with a $1.6 million Australian market cap. You don't get a 10,000 to 1 move from a 100 million market cap very often. So sometimes in a bull market, the stocks become too expensive to continue. Probably with uranium, 2 other things matter. The first would be if there was another accident. If you had a Fukushima, if you had a Chernobyl, if you had a 3 Mile Island, that had set the industry back 20 years. That would be very, very, very boring. I guess the third thing would be a global recession or depression that would or could kibosh demand or the affordability of electricity. If you're somebody who really truly believes, that the world is going to come to an end next Thursday, you don't want to be in the resource space at all, much less uranium.
And does anybody want to touch on, Nick, please follow up.
Well, yeah, of course, another Fukushima is going to be bad, or another event. I think those are sort of, black swan events almost, a depression or the world ending. I think you could see more an extended period of a downturn amid a recession that clears itself up in a couple of quarters to potentially a year. So, and I was talking a bit about this earlier, you've seen sort of commodities soften over the past month or 2. Even oil's not as high as it was in March, nor is copper. So, commodities go up based on growth, obviously, as one input, and the cost of production as another. So maybe not necessarily putting an end to the bull market, but making the intermission between the 3rd and 4th inning longer than people would perhaps like.
Got that. Okay, and Fabi, anything you'd add to that?
Maybe if out of the blue somebody figures out a way of increasing secondary supply in a way that we've never seen before, some technology breakthrough. I'm very skeptical because everything in mining happens very, very slowly. And everything in uranium mining and processing happens even more so. And so, unless some catastrophic black swan event happens, then I don't see how we could all of a sudden lose the thesis.
Daniel, do you want to touch on modern day reactors and how they've changed? I mean, everybody knows 3 Mile Island, Chernobyl, et cetera. And I think everybody knows that we don't do that anymore. The industry's different and grown up. But for clarity, would you mind touching on this?
Yeah, I think the key point that I would make is if you looked at a safety perspective, nuclear is one of the safest energy forms. Actually, less people are killed as a result of nuclear than even in the solar and the wind industry. I mean, Chernobyl was a very old design. It was a massive man-made accident in all its right. If you look at the other incidents, and I would call them incidents rather than accidents, 3 Mile Island, nobody was, it was an event on a reactor, but it never went anywhere. And Fukushima, despite the headlines, was actually more of a natural event, which was hit by something you wouldn't have expected from anywhere. Reactors have gone through massive change in safety. I mean, most reactors now are fully passive in their safety systems. They shut themselves down. The new technologies going forward, particularly in the SMRs, actually aren't even pressurized. So, a nuclear reactor by design cannot actually fail. It's designed to physically not be able to explode. So, people's perceptions of them is completely wrong in all aspects, and that's why I think a lot of where we're seeing the sentiment going, and people starting to understand that reactors actually are incredibly safe pieces of kit. They're well tested, and you can see that now in the US where we're taking reactors. The same reactor that was supposed to last for 40 years is now being allowed to run to 80 years and longer, and they're getting more efficient in doing it as well.
Okay, now this morning we had a panel in this room, and Jeff Clark was talking about how he assumes U.S. has sanctioned oil and gas from Russia, and uranium is next. So if this occurs, what's the impacts on the market? Fabi?
I think it might be partially already priced in. To an
One more
extent.
time, sorry?
I think it might be already priced in to a certain extent. Obviously, we've had a lot of weakness in the past couple of weeks, but that whole idea was floating around the market. And when that happened, there was a little bit of a bump. So I'm not really sure that in and of itself would move the needle, because I think people might already be expecting that.
Okay.
I hope I'm wrong.
Yeah, no doubt. I saw you on Twitter. You mortgaged your house to buy more uranium stocks.
Unfortunately,
I saw
not.
that. Who else wants to jump onto that? Daniel?
Yeah, I mean, I think part of it is self-sanctioning. We're seeing some areas self-sanction. Uranium is still coming out. I mean, but when you get people like AEG refusing to insure ships coming out, when you've got 4 of the major shipping lines around the world refusing to move anything out of Russian ports, it's not just, those are big impacts. A lot of I was at the WNFC conference 2 weeks ago in London. It was all about transshipment of Kazakh material, all about Russian material. How are you getting out? Gazprom cannot come out of St. Petersburg very easily. They're having to look at shipping lines all the way through the Caspian Sea, across northern Iran, into the Black Sea, out the Bosphorus, or they've got to ship outside of China. So it is coming through slowly, but it will have a direct impact. A lot of the US utilities were very anti-Russian material anyway. There are some that will continue to buy, but they need to be sanctioned properly to take them out of it. It's having a bigger impact. It's not the U308 that's the problem. It's the enriched that's the problem, and that is the killer. Urenco have 16 months of UF6 left. They are being tapped by every single utility out there, particularly the European ones who are taking contracts off the Russians, who are self-sanctioning themselves and say, can you provide it for me now? And then we go, yep, but we have only so much UF6. We're going to have to overfeed if we're going to do this. If we start overfeeding...
Could you define overfeeding for us, Daniel?
All right. The simplest way I would describe it is, and Dave Cates gave me this example, when you squeeze an orange, and you have one of those orange squeezer machines. So if normally you would go there, you'd pull the orange, give it a good squeeze, you give it a second squeeze, and you've got a glass of juice. Underfeeding, we'll do that one first, is when you give it a third and a fourth squeeze, get every juice out. But now you're in a production line and you're in a hurry. Overfeeding is you just do one squeeze. Just pull it down hard, one time, chuck the orange away. I'm in a hurry to get this stuff out. inefficiently extracting the orange juice. Could have got a second
Inefficient
squeeze.
extraction.
Inefficient
Yeah?
extraction,
Okay.
and
Yeah.
just putting it a physical. So what they can do is overfeed it. They inefficiently extract the uranium. The problem if they do that is they need more UF6 to feed the front line. The problem in the UF6 market is there isn't enough UF6 because Russia also is a supplier of UF6, and the only other major converter is Converdyne, who's not actually in production and won't be until Q1 of next year. So you have a squeeze on the whole, which is why you've seen the UF6 price and the EUP price move already. We've seen that happen 18 months ago. EUP, UF6 went first. What happened to the uranium price? Followed it afterwards.
Nick, you want to bolt something on there?
Yeah, I think it could very much turn into a catalyst, and I would have to mention just rare earths for a second, because you talk about the material, the physical material coming out. I think about the expertise, and I think about sort of like the rare earth bubble or explosion of whenever, 2010, 11. What we've done, similar to rare earths, is exported all the expertise, not only the production. And so when you think about America wanting to regain at least some semblance of uranium production, I think you could have the potential for a squeeze opportunity when you bring Russia into the situation, or at least the potential for that to be a catalyst to these later innings of this bull market that you were alluding to earlier.
Okay, and Rick, I didn't go to you on the Russia question. Do you have anything to add to that? All right. So you mentioned the Sprott Physical Uranium Trust. I saw a statement come out from Sprott recently. I'm going to read it so I don't botch it, but the big money can't even come out to play yet because the market's not large enough, and when it is, they will. So what are your thoughts on the size of the market presently?
So first, I need to say I'm a Sprott director, I'm a Sprott shareholder, I'm not a Sprott employee. So what I'm going to say now is me, not Sprott. What they say, I think, is true in that some of the largest institutions in the world expressed interest in our Physical Uranium Trust, but despite the fact that it was, at least at the top, a $3.5 billion trust and was, from the point of view of mortals, highly liquid. Highly liquid.
Highly liquid.
The big investors in the world, the Norges banks of the world, have sort of minimum ticket size of $250 to $300 million. And the liquidity that exists in the spot physical uranium market, or even in a product as liquid as our own market, isn't sufficient for the biggest players. To the extent that our product became a $7 or $8 billion product, and an institution could write a $500 million check with reasonable liquidity, I think you'd see that happen. I personally continue to believe that for the Sprott product to maximize its potential, that it's going to require either time or a U.S. listing. There are reasonably good-sized U.S. institutions that, because they're ethnocentric, will not trade in exchanges outside the United States. And there's still millions of Americans that trade through their phones that have phone apps that somehow don't understand where Canada is. And for that product to really, really reach its potential, it would have been useful for trade on the NYSE.
Do you expect that?
They said no the first time. You know, we gave it a good shot. I don't think there was any ill will on their part. I think it was a product. Well, they described it as a pioneer product. They described it as a product that they hadn't seen before. And the consequence of that, particularly the fact that it wasn't redeemable, like our other trusts, made them turn it down. We asked them if they really wanted people to be able to redeem uranium and store it in their basement. That wasn't helpful. And so.
All right. Okay, I want to talk about capital allocation now. So the room is full of retail investors. They're here for actionable advice, right? So Daniel, I want to push over to you first, right? And feel free to talk your book, by the way. I'm all about self-promotion. Don't worry about it.
I have to talk my book, aren't I, really, on this one? Yeah, I mean, and I would. I mean, these guys will talk about the different, and we've started with Fabi already. You know, I would agree. You always have to spread yourself around. But when you're looking at the developers, if you look, and I always use this example, and Rick already raised it with Paladin, you know, in the 2007 cycle, the two companies that outperformed every other company in that cycle by a large margin built mines. In the 2011 cycle, the companies that outperformed every other company were the ones that got taken out, and they were almost all in Africa. So, you know, we're in African development. The one benefit we have, 2 of our projects are already permitted now. We can raise the money in the right market now. We're getting our feasibility study out of the way now. We should be in production by 2025. There are companies out there, and I'm sure these guys will allude to them, that have mines built ready to come back. Those have definitely got to be part of that play. Do not be scared of Africa, though. That's the one area the utilities are turning back to. All of last year, every conference and the utilities was diversification of supply. We need new production. We are not scared of Africa. We need African projects back in the basket.
And your trading symbol, Daniel?
GXU.
Do you know your booth number?
No, but it's in row 3.
It's in row 3. All right.
I think it's 311.
Yeah. All right. Nick, I'll turn it over to you. Are you allocating cash right now into the uranium sector? Are you satisfied with your positions and you're waiting? Talk to me about what you're doing right now.
Yeah, I mean, you could talk about it different ways. I was just trying to think in my head sort of how I'm broken up. It's probably 40% exploration, 40% development, and 20% sort of physical and producers, right? Am I satisfied with my positions? Not if they get cheaper. I mean, I in the letter I write about levels that if they pulled back to, that I would be comfortable buying, and I set those out ahead of time. And in the past week, in the pullback we've seen, or 2 weeks, some of those equities have come down to those levels. And so, this is an individual question, the sizing in your portfolio, how much exposure, how much positioning, allocation do you want to the uranium sector? But if you're not in it yet, I would say now is a decent time to get started. And stories are always evolving. I mean, there's been new entrants into the market recently. Of course, there is in a bull market. You might get some cryptocurrency companies changing their name to uranium here in a little bit. But there's players who are drilling and adding resources or partnering out new projects. And so you've got to sort of be tuned in to see what's going on in the market, both at the company level and at the equity price level, I would say.
And Fabi, same question. Are you allocating cash now? Are you sitting on your positions and waiting for something to happen? Talk to me about your action right now.
I'm currently trying to figure out how to ethically sell some of my friends and family members in order to buy more. So yeah, I'm on the lookout for some stuff, and I love developers, so maybe some GoviEx is in due course.
All right, I love it. Now, walk us through your diligence process. So Nick talked about this, right? In a bull market, all kinds of companies change the name on the door. XYZ Crypto is now XYZ Uranium, and we're going to see this more than likely. So, what are some 1, 2, 3 steps that you go through to quickly get to the no? And I say get to the no because if we can get to the no, we can just move on to the next opportunity quickly, right? The faster we can get to the no, the faster we can look at more deals, right? So what's your process?
So the most important thing that I look at is the team. Have they done this before? Because not every geo is capable for uranium specifically, and not every team is capable of putting a mine into business. It's a very complicated asset. It's a very complicated industry, and so just basically looking at the team and asking yourself, have they done this before? Are they coming from operating mines? Are they coming from successful exploration projects? And with that, you can really narrow it down very quickly. And then after that, you have to look, do they actually have any uranium in the ground? If not, okay, what are the real chances of finding the stuff in the ground? Are they in a jurisdiction that's positive for uranium? Athabasca Basin, good. Africa, good. Some other places, what is the jurisdiction like for other uranium projects? Have they been approved before? Is there any uranium mining? Something that's very strong with uranium is NIMBY, not in my backyard. Not every community will allow you to build a uranium mine. So that's something that you have to look into as well. And that really narrows it down to a few teams that know what they're doing.
All right, Nick, same question for any investors who don't have positions in the uranium space, decide to make that decision after this panel, right? Give them some guiding steps.
People are definitely important, but I'm a structure guy through and through. So I tend to go to the structure first, to how many shares they have outstanding, where they raised capital at, what is it fully diluted, how many warrants did you have to give out there? Typically that makes me not go to the Australian listed companies, just because of the way they structure their deals. Are they capable of raising money? Speaking to the team and the share structure, you have some companies that have been weathering the bear market for so long that their share structures are getting a bit not tight, let's say. And so the structure is the first thing. Jurisdiction then comes in, I think, second. So there are jurisdictions I definitely look to. primarily here in North America is where I like to focus. And those, I think, are the two things that I look at first, the structure and the jurisdiction.
Okay, and Daniel or Rick, any closing words from the panel?
I'll start there and let you finish off, Rick. I mean, look, I think the key point is what Nick has been saying. We've had a pullback, definitely a buying opportunity. The fundamentals for our industry have gone through a massive change. They are as good as they have ever been, I think. I think just the whole emphasis towards nuclear has changed radically from the last 20 years. We're in one of the fastest global nuclear reactor build rates that we've seen in the last 25 years. And sentiment has changed. We have not added a new mine since 2011. Massive investment underinvestment in an industry. It needs to see new projects. It needs higher prices. It's got to be the most exciting time for uranium that we've seen in a long time.
I love that. Rick, anything to add?
Yeah, I mean, keep it pretty simple. Either the price goes up or the lights go out. That's the first thing to understand. Nuclear, despite the fact that Greta and people don't like it, is an important part of the world's energy mix. And if the price of uranium doesn't go up to the point where the industry earns its cost of capital, literally the lights will go out. So you have to think for yourself as an investor, is it more likely that the price goes up or is it more likely that the lights go out? Once you've done that, I think there's 76 public companies worldwide now that purport to be in the uranium business. We think that there are 12 that are viable at $75, which we see as the incentive price 3 years from now. Do your homework. If you're not going to do your homework, this is a blatant commercial for Sprott, buy the Sprott Physical Uranium Trust and buy the Sprott ETF. If you're not willing to do the work to separate the wheat from the chaff, get into space and get into space with as little effort and as little risk as you can.
Did you guys enjoy this? Thank you so much.
This is Jay Martin.